Good morning, traders. Welcome to another Flow Show. We write Wednesday, 9th of April, 2025, and we are ready for another wander into the wonderful world of markets, tariffs, etc. But before we move into the thick of what has happened and what will happen, just a reminder that you can join our wonderful community for just $1 for 10 days. And I can also say that soon we will not impose, but we will give you some counter tariff measures. Just stay tuned. There is something really interesting happening with our Forex analytics um, subscriptions, etc. And so stay tuned. Sign up already today. You can join us for only $1 for 10 days. And by then, I think we will have our little campaign started already. So stay tuned for that. Join us in the meantime. It's really a great community for people sitting in front of their screens at home or even in smaller offices. For myself, it is as a replacement for the big offices that I used to be in. When you're sitting at home, trading can sometimes feel lonely, but in our community, there are many like-minded traders ready to help each other. We are, besides what we are doing on our shows here and on Face, we are live in our community day in, day out, and we update people and try to help people in every step of their career as a retail or a small fund trader. Also, we have many different people there in our room. So come and join us. You can also still take the trader funding program. Just click the links when you would like to get started. We do have a few different options there, and also we are still coaching people one-on-one. If you have a bit of difficulties in some of the steps or questions about something that you would like to ask one of our team members, and ask them to help you along your trading path, don't hesitate. We also give you discounts on the first hour that you would be talking to us. So there's a lot of things still happening in our community, but I would say still the best thing is to come and join us here and on our platform. We have several rooms where we discuss everything from general chit chat to fundamentals, technicals. We talk about indices. We also provide some news and research for people that may have missed headlines or so, where we talk about those as well. We have a specific room. We also have the Flowonomics room where we talk more about the fundamentals and also talk about, obviously, about trade IDs and stuff. And we also have a Spanish room where our friend Leandro will be very happy to welcome you as well. And then we have our trade room where everybody, or those who would like to, it's not obliged, but those who like to just put their live trades in there and give ideas to the rest of the traders in our community. So come and join us. It's really a great platform to be on. So see you soon with us in our community. Right. What's happened? Well, one may say a lot and not a lot at the same time. And the problem is um, that not a lot can be quite damaging these days. So what is this? Oh, sorry. So basically, nothing's changed on those tariffs, meaning that they have not been scaled back. So Trump slapped the additional 50% tariffs onto China, really continuing, let's say, the trade war rhetoric. We obviously already heard from the Chinese that they want to take issues into the WTO. They will continue to fight. They will continue to protect their people and their economic interests. So basically, what what was feared that could happen is actually happening right now, and we are not a step closer to any resolution anywhere. Now, this being said, Trump is still saying that he expects a call from the Chinese pretty closely, and some in the Chinese press have also still been saying that they hope for a negotiation type of solution, but it's a little bit like with the conditions that Russia and Ukraine want to end their war. The conditions from one and the other side of the table are markedly different. So unless tariffs get scrapped, cancelled, reduced, there is going to be no real negotiation, or at least no real solution coming uh, right now. I would say right now, the situation is obviously still very, very fluid. We can have changes at any hour, but for the time being, at least against China, everything seems very stuck. We had loads of comments from everywhere. I'm going to spare you most of them. The main thing that we take away from it is that now that Besant and Greer, the U.S. Trade Representative Greer, have come in the picture, there is for those countries, and I'm just going to take their words again, for those countries that do not retaliate, there will be room for negotiation. There are somewhere between 50 and 70 countries, depending on who we listen to, that already contacted the US to negotiate, to sit around the table. So that is somewhere, having those two in the negotiations seem to leave a few doors ajar for negotiations, but nothing is done yet. They are now sifting through who is the good and who is the bad retaliator or the non-retaliator, and then they will prioritize their talks with the different countries to try and find solutions. One of those countries is obviously Japan. So we had a bunch of comments as well overnight coming from the Japanese side. And aside of all of this, I mean, Ueda was also talking, but he was like really saying that he doesn't know right now, that they have to wait for the tariffs impact, that he's not so sure about the immediate rate path that the Bank of Japan should be following. Their next meeting is on the 17th of May, so there is still time there to find solutions, which the Japanese officials really want, because we heard from the Japanese Finance Minister Kato that they already started to talk. There are people flying over to the US, a negotiation team as well, and it does seem that Japan is willing to keep or to put the FX discussions on the table as well. Um, we know that Trump is also always pointing fingers at countries who supposedly manipulate their currencies lower to try to compensate for their tariffs. China being a big target, but actually Japan has been a target as well over the years, and Trump is not missing an occasion to repeat that. People who manipulate their currencies. Are not really close to get a deal, so there is a risk. So the Japanese, they are willing to put that FX on the table. So that's where we also saw the well, risk was one thing, but the recovery of the yen overnight is obviously part of the reasons are this potential negotiation on FX. Now, besides that, the Japanese government now is rumored that they may send basically checks to people for somewhere between 40 and 50,000 yen, which in today's money will be about 300 euros, about 300 euros, 300 bucks, or yeah, 350 bucks or so, to send to people just to try and smoothen the effect of tariffs being slapped onto to the Japanese people. So we are back to the kind of measures that we saw post well, when the pandemic hit, basically. So that is interesting that Japan is using this. Hang on a minute. Is using this to yeah, to try to alleviate the pressures. But it's kind of interesting that they are using pandemic style um, solutions or remedies to in the immediate. So that's maybe we should look at potentially other countries or other blocks to come and have a look at things like that. We heard from the UK, we heard from the European Union, we heard from the Canadians. They are also looking at countermeasures on the one side, but also looking at measures to support the economies, their economies, with certain measures of support to different sectors in the economy. Um, Staying on the economic impact of things, moving over to the central banks, we heard from a bunch of central bank speakers, and especially at the ECB now, they are starting to, even the hawks are starting to say that an April cut is on the cards because they don't know or see the immediate impact on inflation, whether it be short-lived, whether it be a long-term impact. Since they don't know yet, they are now focusing on growth. And even Ren, who normally is a relative hawk, has now said that he would be voting for a rate cut in April. And we have the ECB coming up next week on the 17th. So on the 17th, we will hear from the ECB. Not too long to go, but we seem to be heading for rate cuts, and the market is pricing now rate cuts across the board. They really have. Or are thinking really that all central banks or most central banks are going, barring Bank of Japan obviously, but are going to cut rates because of the weight on growth in the various economies. So rate cuts are really being touted by most of the analysts now, and bigger rate cuts than before any of those tariff announcements. So expectations are building for renewed rate cuts and repeated rate cuts, not only one and then see what happens, but repeated rate cuts. And that was something that we have mentioned here on the Flow Show as well. Many times the central banks are in a wait and see mode, wait and see what's going to happen. First of all, are those tariffs going to be slapped onto the countries? It's been bigger than expected. And then what is happening after that? And then they will react. And I think now we are very close to reaction time from the central banks, at least the start of. Sticking on to the rates, what's happening in the bond market and in the rate market. As I said yesterday, we will have more auctions this week, but we had the 3-year yesterday. It was a crisis type of 3-year note, I would say, but the bad one. Really, it's been a bad auction. Um, the beta cover ratio was lower than the previous one. The direct accepted was incredibly low at 6.2% versus the prior 26%. So we had also a very big tail of more than two BP. So that's really a bad auction. We've got the 10-year auction coming on later today. It is going to be something that the markets are really going to be watching very closely as well, because we can suspect that that is going to be a bad one as well, especially seeing what has happened in the yield and in the bond market just over the past sessions. We really see those yields ramp higher. There is a real scare there for inflation, perhaps the debt also now coming back. People are being told, or the market has rumors as well, that the basis trade is getting unwound. Potentially China as well. I told you already that the rumors were going that China may potentially start to sell US treasuries as well. But I also added a disclaimer. I mean, we are going to hear, and we are hearing a lot of things, okay? We will have to know, or we will have to see the data, okay? For instance, end of January, um, China was holding about 760 or so billion dollars of US treasuries, US bonds. We will have to see how those numbers evolve. It is possible that they sell some out, but the thing is, why would you sell out something that is usually a relatively stable and safe in terms of rating, safe market, and shoot yourself partially in the foot. Now, if we go to an all-out trade war, it could be that they sell more treasuries, and that should again put more upward pressure on the yields. But in how far they will go, and if they even will go with quite larger sums, still remains to be seen. I want to see the data before really saying like, yes, they did. I suspect they may, but I don't think in such a way that the market is perhaps expecting. Mike Delfino, the basis trade is actually markets or hedge funds also taking advantage of differences between bonds, for instance, and futures, and they are making like a huge ton of money on like fractional differences, but they are holding like very big amounts they are doing very big amounts in that. And regulators have already said that it may become an issue when there is financial stress in the system. And like there is now, we can safely say there is some financial stress in the system. Now, this kind of basis trade can be unwound, and we see quite violent moves in the bond market deriving from that. I hope that makes it relatively clear. It's something that I can't explain in like just a minute, but I hope I explained um, just a little bit of it. So basically, they take advantage of market pricing discrepancies in one instrument versus another instrument for the same underlying asset. Okay. Now, staying at the rates and moving over to what happened today, RBNZ cut the interest rates as expected to 3.5 from 3.75%. Are they done? We don't know yet. They are probably going to keep all the options on the table, like all central banks are doing now. The RBNZ, I mean, they're also reacting to this tariff play like everybody else is now, and that's what they said. Basically, they say as the tariff impact becomes clearer, they have the scope to lower interest rates further, as would be appropriate. Okay, so that's um, the main thing that we have to take away from the RBNZ. I think we are going to see more, and as what I said, we are going to see much more of those rate cuts coming, especially if it weighs on growth. The thing is, and I maintain what I'm saying, central banks would hate to have to raise rates because of bad inflation that we are seeing now. I rather think that they would compensate it by doing some form of something like QE, buying bonds or so to counter excessive yield swings. We may be actually closer than people expect. It all depends how the yield market will pan out going forward. But that is rather what I'm seeing personally, is that central banks would rather start to buy bonds, and I'm thinking about the ECB, perhaps I'm thinking about especially the Fed as well, if we see big inflation expectation spikes, rather than being forced to hike interest rates, because hiking interest rates is probably not going to help much in current scenario, and may send actually a very inverse signal to the market for what growth data are concerned and growth expectations are concerned. Okay. Right. What is happening next? Oh, by the way, the Indian central bank as well have also cut rates. The RBI They also cut rates to 6% from 6.25% for those following the Indian rupee. Um, what do we have next on for today? We are seeing a bit of CPI numbers coming out of Mexico. Again, those are numbers for March before the tariff announcement. They may already be a little bit impacted for the on the expectation side of things, but probably the market will shrug off those data relatively quickly unless they come out extremely far from the expectations. Um, do we have anything special? We do have the FOMC minutes later on today. I think we heard already from Powell in between. They were clearly in a wait and see mode, right? So I think those FOMC minutes are not going to tell us too much. Things are on the move elsewhere and in other areas right now, or in the areas right now that they are forced to monitor right now. And I don't think we're going to learn a lot about those from those FOMC minutes. We do have the still March as well. We do have the Chinese CPI out tomorrow as well, but it's still March numbers as well. So um, for what the CNY, CNH are concerned, I just repeat what PBOC said. They are not thinking of immediately letting the Chinese yuan um, drop significantly. Now, I think it all depends on the translation that you read there. I think what the message here is that not that they are not going to let the Chinese yuan slip a bit. As a matter of fact, they fixed above 720 again, 720.66 overnight. So that is again a little bit higher than what we had yesterday. But I think it's going to be the main message here was the immediate. Okay, they asked their main lenders not to refrain from too many dollar buyings, so they want to keep everything on a relatively tight leash. Does it change my opinion about what they are planning to do? No, but it's not going to go according to market terms. Market would want to go like, oh, okay, dollar CNH, and let's move straight over to the rate, shall we? The market would love to go like, oh, okay, dollar CNH, let's take it straight away to 780 and here we go. That is not what the PBOC has in mind. Okay, that is not what the PBOC has in mind. The PBOC has in mind to probably let it slowly go. It's probably going to be erratic. We have seen it already overnight, basically. We raced up to that 61.8 of the long term very rapidly on the announcement that Trump said that they would keep that additional 50% in. But then, as we saw the dollar give back some terrain elsewhere, dollar China also gave back. And then the PBOC obviously came out earlier this morning saying, giving those kind of comments on the Chinese yuan. So that's where I'm saying, I mean, we are going to see these kind of moves, but I do think we are going to continue gradually. That is the play for now. Now, longer term, we are going to have to be patient and see how much noise there is, okay, and how much perhaps a dollar could suffer elsewhere. All right, but in the shorter term, for this play to continue, obviously we have those prior highs here. We've been really talking about those enough, but I think for the shorter term play, for me at least, it would be enough that we start to hold 735, around 735, 736. If that holds, then I think we can see this kind of move, which is gradually going to take us higher, because I do think that the Chinese want, if not the US, they want other countries to take more of their goods. They are supported their economy inside, but now they need the outside support as well. So that I do think that they are in for a gradual weakening of the yuan. If we start to break below 730.31, I think then we have to abandon this idea. Now, I'm just going to add why I'm saying 780. It's not only the 78.6, but remember the band in dollar Hong Kong. We have a band in dollar Hong Kong, 775, 785. And imagine that China, PBOC, would let the Chinese yuan weaken a bit. I think the 780 is a very decent level to bear in mind if that happens, because it's going to be right in the middle of the dollar Hong Kong band. And since they are now one country, let's say, but still with different currencies. I think this would mean that if they put it there, we're going to see an alignment and probably um, get a fixed rate, perhaps between the Chinese yuan and the dollar Hong Kong. This is one of the additional reasons why I am looking particularly at a potential move up to 780. I mean, talking about that on the prior show and already in our room as well before. Um, what's happened in the rest of the currencies? Euro dollar. Go back onto the shorter one first. We had this triangle with 108.90, 109.15, depending on where we put the line on the downside. We've had several tests below there. We have several tests below there, and now on the tariff break, we are moving higher. We also, and we are turning around again. We also broke briefly above that longer term trend line coming in from those highs that we had back in 2020, 21. Okay, but this trend line is getting watered down now. I think we need to look more at the broader levels, because we are starting to go through back and forth a bit too often. So I think for me now the next level on the top side is this 110.90 figure, then the prior 111 and a half ish. And if that would go, then we are talking back about those levels that we saw. And then we need to go back to the levels we saw here, the 112, the famous 112 three quarters. That was a big retracement fib of the bigger move. Then the next high here is also just above 112. So if we start to break above 111 and a half, I think we are going to talk about the 112s. Mike, why is the euro resilient? There's a few things. I mean, before the tariffs even, Europe was already trying to make work of with big plans, spending plans and on defense, but also on infrastructure and stuff. It does seem that they are trying to get their act together a bit as well. It also is now they try to act together in potentially retaliatory measures as well. But on the other hand, they are also not um, completely shutting the door on all those other tariffs. And Trump has already said that they may be playing nicely and stuff. And last but not least, if you look at the euro crossers and you look at stuff like euro commodity, for instance, you look at stuff like euro sterling, for instance, the risk pairs take away Swiss and yen. The Swiss and yen are two different animals, but the euro is also typically bought versus risk currencies when there is the crap hitting the fan, and that is something that we have seen in the past as well. On the other hand, let me just have a quick look at the differentials. Differentials are not telling us much right now, but I do think really it has a lot to do with what's going on risk, what's going on one block against the other. And let's face it, if you look at, and again, take away the highest risk currencies like commodity currencies, and so the dollar is actually suffering, yeah, and the market is doubting about the economic impact on the US from all those tariffs and a trade war. So that also is an additional reason why the euro is resilient and finding bits on dips. So I think this is relatively normal in the current context. I do think though that if because we always have to look at both sides in what's happening in the markets right now. There's a lot of lines here, but I would in particularly watch this 108.90 because we have tried a good few times now to get there. It's also a prior high. I think this is a very interesting level to watch. All in all, if you would come back down there, watch the reaction here. If it bounce again, really, I think, and I think it's going to be erratic. It is not going to be a big because we've seen this already. And depending on any headline, we could be 100 pips lower or 100 pips higher. But this has to hold for this erratic move to continue in the euro dollar and eventually go and test the 112 or so. Moving on to the cable. That's interesting as well. You know, what I've been discussing as well in our room already a few times, and what I told you as well yesterday here, 127.1030, pretty decent resistance. If we break or if we hold and we break above 128.10, 128.60, 65 is your next level. Look where it stopped. So this is a pretty decent range that we have now in place. So I'm continuing to monitor this from the longer side of things. Okay. If you come back down here, I've already obviously this morning in this rally, I've let a fair bit of my position go, and as usual, I slice and dice, and I take some partial profits, re-enter potentially, but it seems to me that we are going to be in for a retest sooner or later. We had the setback, same as in the euro this morning, but we're finding intra range, let's say, already support. I think we are perhaps in for a bit of a retest here. I've been drawn. My attention has been drawn to perhaps the cloud as well, but the longer term cloud. But I don't really like what I'm seeing, even though we could see here that this weekly cloud has been longer term, perhaps a bit respected, but the intraday moves taking it above and below are not really of the sort of pushing me to at least to pay too much attention to what's happening in the cloud situation in some of those pairs right now. Couple of interesting ones overnight. Kiwi, there we go. Kiwi, we had on the back of that risk off and the RBNZ cutting the rates. We had a quick look under that 55, but it bounced really, really quickly. So this is something that where technicians will probably start to look at this potentially being a fakie, okay? 55 and a half, 55.40 is a bit your inside range hinge, but I think we need to look again at what's happening around 55.90, 56, the figure. Okay, and I know we went above and then crashed again, but I still think it is going to be a level that we need to watch for as long as that caps. We're in this kind of range thing. But the more we get those kind of moves lower and then start to bounce, the more it gives me the impression that we may perhaps find an intermediate bottom. I haven't traded it yet, but I think that we may be finding an intermediate bottom. And I would say the same thing on the Aussie as well. Move through the prior lows overnight, but we held. And if you look at the updates that Blake as well and myself have done in the room for those in the room. And again, that's a very good reason to join our community because we are updating all that stuff continuously in our rooms in various on our website as well for the people in our community, and we're sending out mails and stuff highlighting and alerting our subscribers, our friends in our community to how we view those markets. But the Aussies could potentially do a bit of the same thing as in the Kiwi. Yes, we have broken below here. There is on the shorter term, by the way, there is a bit of a trend line coming in here. That is a continuation trend line of this trend lower. We've broken above sideways, but now we are coming to test this one lower again. I don't know if the pure technicians are going to hate me for this, but I found it quite interesting that we are tapping that trend line and then bouncing again. Same as in the Kiwi. It's still negative. We can't say that this is a positive look, okay? I mean, it's still very negative. But again, what do those bounces mean here? And I'm starting to have a few questions, okay? If the equity markets collapse, I mean, or if US rates go to a certain level where it's unsustainable to be short dollars or so. Yeah, I mean this can go lower. Everything can go lower now. And for as long as we are below 60, 80, 61, the figure, it's still very bearish. But I'm just noting those little rejections that we're starting to have, okay? And I wouldn't be surprised that sooner or later we are going to retest this zone here. Um, we are just trading above the 60 zone. It could be the hinge for the day, but I do think there is it's starting to be interesting. That is just what I'm saying. I'm starting to be interesting. Last look on gold because that was interesting as well. Several attempts to break below the trend line have always held that 29.50, 29.60. This is going to be a very important level. But for as long as these hold, I'm not going to get bearish. I mean, I know I don't, it's not the consensus also right now because people are saying, yeah, but everybody needs to get out of everything. So, I mean, gold should also be trading lower. Metals should be trading lower as well, together with the commodities and things. I don't personally subscribe to that idea right now. And we are finding beats on dips because of the Chinese situation as well. Asia has been buying gold, will likely continue to buy gold, and especially if the PBOC tells the Chinese folks not to buy too many dollars, what else are they going to buy if you let your if you are in the assumption that they are going to let the currency slip, what else are you going to buy? Well, gold to me is still one of those very good hedges against everything that goes bad in the world. And if you look, we rallied $70 from the low with much higher yields in the US. This is a bit counterintuitive, but this is what gold does to you when people take refuge in the hard stuff, you know, and in stuff that you only keep in crisis periods. This is what this can do in gold. So for me, I'm not bearish. I'm not bearish on gold for as long as we really keep first of all above this 29, 50, 60, and then we will see if that would break. Then we're probably on our way to 28 and perhaps a little lower. But I'm not really bearish. There is sterling yen. We're still on. Oops, no, that's the cable. A bit dangerous, isn't it? A bit dangerous. The fact that we've broken below, even if we're above again now, but the fact that we've broken below those last lows is still looks dangerous. There's nothing bullish about this picture, right? I don't know what you're thinking yourself, but for the time being, there's nothing bullish about this picture. I'm not a bear on the sterling as such, but risk, yen moves, they all tell us that it's hard to be bullish on stuff. Yes, you can buy for bounces if and again, look at the bounce we did make. All of it is like linked to what's happening in equity markets right now. Okay, obviously those negotiations between Japan and the US will have a big impact on the yen. Don't underestimate that, by the way. It will have a big impact. But this one, I'd rather not trade it because I have kind of the similar view on both currencies. But there's nothing bullish about this picture at all right now. Yeah, as it exhausted, difficult to say. There is going to be relatively big support if ever we get down into the 184s, I think. But exhausted. Not for as long as there is a risk in the equity markets. Not for as long as that persists. Be just a bit careful if we start to move back above this area here. But that's a while away. That's 188, 2030. Then I'd say would be a bit careful because then we can do that quick 150 pips maybe back up. But yeah, just saying I'm not really very very bullish on this right now. Okay, ladies and gentlemen, I'm going to call this a flow show. Just a reminder of what I said at the start of the show. Come and join us. Before your 10 days tryout is over, we may be announcing something spectacular. Just listen to or wait for updates, especially from our man Blake Morrow. He will probably tell more to people for what is going to come. But keep on the lookout. In the meantime, come and join us. We're more than happy to talk, and we are talking much more than just what we are talking about on our shows here. And we will catch each other tomorrow. Thanks very much for being with me again today. Trade safely. Bye bye.